Hello, ladies and gentlemen. I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, again, we start with Chinese stocks. They were, of course, suspended from all trade on Thursday after the CSI 300 tumbled more than 7% in early trade, triggering, of course, the market's circuit breaker for a second time this week. On the mainland, however, the Shanghai Composite Index had tumbled 7.32% by the time of that halt. Now, before the trade, however, the People's Bank of China set the yuan's midpoint at 6.5646 per dollar. That's about 0.5% weaker than Wednesday's fix. The biggest fall between daily fixings since the devaluation began in mid-August. And of course, the spot trade, the dollar-yuan pair, was at 6.5906. Expectations the yuan will continue to weaken may of course spur outflows from China's investments. Also tracking the Japan's Nikkei 225 index, which slipped more than 400 points to close 2.33% lower at 17,767.34. The Japanese yen, however, considered as a safe haven currency, continued to weaken in Thursday's trade, with the dollar fetching around 117.93 yen compared with as much as 118.75 before China trade halt. In Europe, markets traded lower on Thursday, of course, on further turmoil in the China stock market, where, of course, stocks were suspended from all trade on Thursday, and the oil price hit levels not seen since April 2004. The Pan-European Stock 600 index was down 2.2%, and on the data front, Eurozone unemployment data, retail sales, and economic statements are due later in the day. The dollar weakened against a basket of major currencies on Wednesday as a record of the December 15-16 meeting from the Federal Reserve policymakers that supported bets further the U.S. rate hike would be gradual on the concerns about persistent low inflation. However, members of the Federal Open Market Committee, the Fed's policy-setting group, unanimously voted increase of the U.S. rate for the first time in near a decade. That was last month due to improving labor market. The dollar index that measures the greenback against a group of 6 currencies was last down 0.1% at 99.303 following the release of FOMC minutes. Gold in the commodity sector climbed above 1,100 an ounce for the first time in 9 weeks on Thursday, as of course investors challenged money into the safe haven metal on a global stock market route. Worries over the Chinese economy and heightened geopolitical tensions made gold rise to 9-week high of 1102.80 an ounce before pairing some of the gains to trade up 0.4% at 1098.20 in late Asian trade. West Texas Intermediate in the energy sector futures set fresh 2009 lows of $32.77 per barrel, with prices climbing back to $33.17 in late Asian trade. Of course, the inventories that we saw yesterday showed a 16 million increase in distillates and other products. So it's clear they're still producing at a rate that is unsustainable, with, of course, huge storage overhang. Means that even if U.S. production falls this year as drillers come to low prices, it will take many months to work down excess supplies. And as we mentioned in the calendar today, the most important at 10 a.m. GMT EU consumer confidence and unemployment rate, following at 12:30 ECB Monetary Policy Meeting. That's all for today. Stay tuned for the most important. We'll keep you informed. See you next time. Bye-bye.